Morning, Julian. Yes, well, you've got to remember, November is traditionally the strongest month of the year, especially in the US. You know, coming up to Thanksgiving, Christmas, people are in a pretty good mood. And also, you know, I came on a few weeks ago and was very encouraged, obviously, by the Fed's activity and the stimulus. And this remains a really exciting bull market. I appreciate all the bad news, in fact, about COVID. But if you just do a sweep round the world, you've got the MSCI that's trading at an all-time high. You've got the Dow at a record high. You've got the S&P at a record high. You've got the transports, which is a gauge of underlying economic activity in the US, at a record high. Small mid caps, Russell 2000, are a record high. So the market is saying, it's looking through. Look, bottom line, markets will always discount 12 to 18 months ahead. And it's telling you that things look a lot better than they do today. Look, I don't know if these basically vaccines are going to be a success. They certainly, given the efficacy, they certainly look like they are. But what it's telling you is that we are going to learn to deal with these difficulties, and we will be in a lot better place next year than we are at the moment.
Patrick, all those references to the record highs we're seeing being made around the world, in particular in the U.S., begs the question whether all this good news is already priced in, and what happens if we get further good news on the vaccine front, but even more so if we get some disappointing news on some of the other vaccines that we're still waiting for. So would you say that at this point, most of that upside is already being priced in?
Yeah, that's a great question, Juliana. But I think if you've just got to look at the sidelines, even though sentiment has got a little bit more encouraging about equities, so you're going to see a little bit more volatility because of, you know, COVID, because of politics, you know, because of the stimulus. But you've got to remember, there's $6.5 trillion sitting in money market accounts, on the side. And net, despite obviously record flows into equity ETFs recently, you've seen actually more sellers of ETFs out of equities this year than you've actually seen money going in. So there's still a lot of despondency, a lot of reticence with regard to going into the market. And they are still pretty unloved, generally, equities. You know, a lot of people hiding actually in cash. So yes, I do. I think it will surprise everybody to the upside. You know, I was speaking to my strategist yesterday in the States, and we were talking about potentially, because we see growth stocks most probably stabilizing here and value doing better. You know, we talk about maybe 40,000 level on the Dow next year because of the makeup of that index, which is more value than growth.